Good morning, traders. It's Monday, the 9th of November 2015. It's 8:01 a.m. Chicago time. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not indicative of future results. Just a fast rundown of what was driving the trade overnight. China's trade surplus hit a record high. China's trade surplus widened to a record 61.64 billion in October, but that was shy of the 64.75 billion surplus that was expected. Saudi Arabia's state-owned Aramco says it will not cut production as a result of the falling price of crude. Crude was up quite a bit. Actually, no, it wasn't. Yeah, it spiked up and then it dropped. Eurozone November Centex investor confidence 15.1 versus 13.1. This is the first improvement in 7 months. Fed's Evans came out to speak a short while ago, says not predisposed to vote against December rate hike, would like FOMC to signal a gradual path on rates. That's pretty much the gist of it. Looking at today, the only we have we don't have any releases per se. We do have at 9:15 we have ECB Speaker Mersch, who's a hawk, delivers introductory statement at the conference in Luxembourg. The finance ministers meet in Brussels today, EU's finance ministers. And at 11 we have Fed Speaker Rosengren on the outlook for the U.S. economy. You'll want to pay attention to that. Other than that, pretty quiet day. And as you recall, it's the Monday after FOMC. So likely to be a fairly slow, choppy day. So you want to factor that into your trading plan. Looking ahead at the week, since it's Monday, we're looking at tomorrow. We have import prices, U.S. import prices and wholesale inventories. ECB's Constancio, Nui, and Kerr. Wednesday, UK ILO unemployment, ECB's Constancio, Visco, and Draghi. Thursday's a German CPI, European industrial production, U.S. jobs claims, and Fed's Bullard, Yellen, Lacker, Evans, Dudley, and Fisher on Thursday. So it's a parade. It's a Fed parade on Thursday. Friday's German GDP, UK construction output, European GDP and trade balance, US retail sales, advanced PPI, business inventories, University of Michigan, ECB's Nowotny, and Fed's Mester. Again, Thursday, Friday look to be fairly packed with what could potentially drive the market. Let's switch gears now and look at the market itself. So just a quick review. Here's what was said on Friday, what was expected off of that non-farm payrolls. Remember this profile. We'll look at that again, this profile here, a double distribution profile with a cutoff right where we're opening. And what I had said on Friday, if you watched, is that it's hard to tell which side is likely to dominate on the open. However, if anything, then we are looking for a push to 94.50 early, which we got. 94.50 and then potentially the 97.50 before it turns down, if it's going to turn down. If it does turn down, we were looking for 88 and 74, 88.79, which is the FOMC high, and 74 and a quarter. So let's compare that to what we got. So on Friday we ended up opening a little bit higher than what was shown in the trader bite. We did push into that 94.50 and took it out. From there we pushed towards the 97.50. We got to 96 and a quarter before we had this very large rotation down, a big drop there, 20 points. And on that drop we took out the 88 up here. We took out the 79. We pushed through the 79 by 6 ticks and then came all the way back to the opening swing low. A lot of chop, and then we finally ended up pushing into the opening swing. The expectation then was for it to trade the other side of the opening swing, which it ran out of time to do. We ended up pushing up to 94 and a quarter and closing basically where we closed the prior day. So the close of the prior day is this orange line here, and the close of Friday is right there. Also notice that VPOC was at 94 and a quarter, and it ended up at 93 and a half, just 3 ticks. Very blunt ledge on the profile, so the expectation was for a higher high. We did get that overnight. The overnight high is 97.75. And this profile is not telling us anything other than the market was not interested at these low prices towards the 77.50, starting with about 79. You can see the 79 had almost no volume going across it. So there's a very rapid taper as this sell-off occurred. Volume just quickly dried up before the rotation up. So despite the 20-point down move, we ended up taking that back. It took all day. Like I said on Friday, normally non-farm payrolls would come in. The non-farm payroll release gives us about 6-7 points of range. We come in, we balance the books, risk on, risk off, and then they're gone for the rest of the day. And Friday was expected to be active through the close, and that's exactly what it was. For obvious reasons. I mean, that number was really, really big, 271,000. And so the expectation was for the market to battle that price out and find value, find balance throughout the day, and that's what it did. However, did it find balance? It did. I don't believe it did. Again, the point of control of Friday is inside of the value of Thursday. We have a balanced situation with a weak high. The expectation is for the market to look to push higher. However, the overnight session was conflicted. When we look at the overnight session here, dark gray for the night. When we look at the overnight session, we get this push on some Japanese news in the on the open of the overnight session. And then we push through to the 97.75 to put in that higher high as expected over Friday. But from there on out, as Europe opens, it's just nothing but selling, led by France. The CAC 40 is off a fair amount today. The profile overnight shows a very clear B shape. So imagine if it's on the right side, it would look like a B. This is a long liquidation profile. We have a fairly weak low on the overnight against 2086. Remember, the 88 area has been key so far, and we're not able to lift off. So the expectation, given the most recent auction, the fact that we canceled out everything we've done on Friday and in the overnight, it looks like we're likely to attack this 2086. An important thing to note, Friday's 20-point rotation occurred before the initial balance was put in. This is a very, very wide initial balance. First hour's high, first hour's low. So what we ended up with Friday is what's called a normal day. Normal days, I'm not in agreement with the name, because normal days only occur about 3% in the data set that was tested and retested about 1900 days. The market breaks the initial balance high, this yellow line, or the initial balance low about 97% of the time. Depending on how many days you use, it's 97 to 97.5% of the sample. Again, past performance is not indicative of future results, but it was unable to do that. So this day here counts as one of those 2.5, 3% where the market remained within the initial balance. A very wide base. What this is a very wide base for the market to pivot around, and it was not able to tip it over. Glad that's behind us. But it's important to note that Friday, despite the wide rotations, I mean, you have 9.25 points, you have 12 points, you have a 20-point rotation, which was broken up in two here. It was broken up into 12.75, and then it pulled back, so it reset our zigzag counter, and it went down another 8.75. But the total is about 20. Despite the wide rotational market, was not able to um, tip this IB over and test either side. So there's a fair amount here to work with today. Unfortunately, given the overnight session, um, we have it leaning up against the overnight low, which pushes us up against this 84 area, 80, 85.50, 84. 85.50 is the high volume node. Um, from Friday. That's the second largest area of trading. There was a fair amount of trading that occurred in this area, and it's gonna act like it's likely to act like a magnet now. And the expectation is for this to push through the overnight low. However, I don't think that's going to be sustained. I believe that the market's likely to push through to 84, test this value low, and then walk itself up to 93.50 and potentially push through um, Friday's high. That's what I'm looking for as the primary idea for the day. There was a very strong in this rotation here in the on the close on Friday. There was a strong delta price volume on this price movement. So I think those guys are going to show up. If it was cheap down here on Friday at the opening, at the closing swing low at 84.50, which happens to be the value low, if it was cheap enough down here for there to be 18,000 contracts in delta, meaning 18,000 more buying than selling, this doesn't describe the volume that went off. It just describes how much more delta on the offer, how many more aggressive buyers there were, or how many contracts bought aggressively versus contracts sold. I believe these guys are going to show up. So if we do get this responsive selling, I'm going to be looking for the overnight low break to fulfill the overnight stat. And then I'm going to be looking for this to push back up. I believe these participants are likely to see value here again because nothing has changed. The context has not changed. This would be a cheap price once the market goes down. I'm not suggesting that that's a trading plan. Not suggesting that you mortgage your house and buy the highest number of contracts you can. That's not the idea. Just trade your plan, but this is what I see, and that's the expectation for Hypo One. So responsive initiative selling, which isn't likely to push through very far down into the 84, 50, 84, and then I expect responsive buying back into the 93.50, and then an attack at the 96.25 and 97.5 area, like we designated on Friday. Okay. So that's basically what I have for you. I want to announce that tomorrow we're doing a convergence event. Convergence events are it's like Convergence Tuesday is an event where we highlight something. What we've done in the past is we've spotlighted a trader, somebody who's doing well and is open to sharing what they're doing and why. We've done trader interventions on Convergence Tuesday. We brought someone on, looked at their stats, and dissected what their performance has been, just as if they were one of my prop traders. A lot of people find that useful. We've also highlighted a product or software. Tomorrow's event is Convergence event is to look at the S5 Bookmap. The S5 Bookmap is a piece of software that lays out, that gives you an image of what the order book and the order flow has been. and it's a tool that I've come to use very, very heavily in my own trading. Tomorrow we'll do some real-time trades. This will take place at 3:15 after the cash close or after the pit close. We'll start at 3:15, and in it we will cover a contextual read and look at how things are shaping up so that we can look at when we trigger trades. It is a tool that I use. In fact, I trade off of it. It is a tool that I use to try to get as tight an entry as possible. And I've received just so many questions from last Thursday's AMA that it just needs to be covered all at once in tomorrow's event. So hopefully you'll join us. I'll post a link to it on Twitter, and if you're on the list, the public list on futurestrader71.com, then you'll get notification. If you cannot attend, the recording will be made available to you. But I think it's worth looking at. I'm not trying to market or push a product to you. I don't get paid by anyone to do that. I'm not collecting any money to talk about S5 Bookmap. But it is a very good tool to look at where you might get a better chance of executing at the lowest risk possible. So that's tomorrow at 3:15 Central, 4:15 Eastern. Look for the announcement on that. Good luck today, and I'll catch you tomorrow. Take care.